In this video, I will be sharing an amazing short-term swing trading strategy that can help you recover your losses with ease. The profit potential of this strategy is limitless. And the best part of this strategy is that it is a strict rule-based system. So, beginners can also trade this strategy with ease. Before we start, be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. The strategy that I will share today is a swing trading strategy. Hence, you can expect your trades to last anywhere from 1 to 3 weeks. The time frame to be used for this strategy is daily charts. In this strategy, we will trade in the direction of the trend and the momentum. Then we will try find small pullbacks in the trend. So here are the rules for buying. First, we need to look for stocks that have created a new 40-day high. This means that we will look for those stocks that have closed above the high of the previous 40 days. You can use screeners to identify such stocks. If you don't have any screeners, you can manually use an indicator called as the Donchain Channel Indicator. Donchain Channel is a simple indicator that shows the high and the low for a certain number of candles. You can go over to the settings of Donchain Channel's indicator and type in 40 instead of 20 for the look-back period. Now, your chart will show you the range for the last 40 candles. So, whenever the price makes a new 40-day high, the upper boundary of the channel will rise. This shows us that the price has made a new 40-day high. When the price makes a new 40-day high, this indicates that there are strong buyers present in the market. The bullish sentiment in price will help us in achieving profits. After the 40-day high, we want the next 3 candles to make consecutive lower closes. This means that we want the close price of each day to be below the close of the previous day. For 3 consecutive candles. Then on the 4th day, we want the price to close above the close of the previous day. This will show that the price has successfully made a short pullback after making a new high. So, we knew that the market was in a bullish momentum when the price made a 40-day high. Now, we have also seen a small pullback in the price. So, this is a beautiful opportunity for us to enter a long position. So we will enter a long position on the close of the 4th day. We will keep our stop loss below the most recent swing low, and we will keep our targets at the most recent swing high. Let's now look at a buying example. So here is an example on the chart. Here, we can see that the price made a new 40-day high. The 40-day high prior to this candle was this. Then, we see that the current candle created a new 40-day high at this level. So, the first step is complete. We have successfully identified a stock that has created a new 40-day high. Now we wait for a pullback. Here we can see that the price creates 3 consecutive red candles after newly created high. Look at the close price of each of these 3 candles. The close of each candle is below the close of the prior candle. So, this is a valid pullback according to our strategy. Now, the close price of the next candle should be above the close price of this candle. And that is what actually happened. The next day, the price made a strong green candle that successfully closed above the close of previous day. This is a perfect setup for our strategy. So we will buy on the close of this candle. We will keep our stop loss below the most recent swing low, and we will place our targets at the nearest swing high. As you can see, the price achieved our targets on this trade. The price made a 5% move in the next 2 weeks following our entry. Now, let's look at the sell setup for our strategy. So the first, we want to filter out those stocks that have made a new 40-day low. A newly created 40-day low shows us that the sellers in the market are actively looking to push the prices lower. Their strength will help us in achieving profits on sell trades. Once we have identified such a stock, We want the price to create 3 consecutive candles with higher closes. So after a new 40-day low is formed, we want the price to make 3 candles that close above the close of the previous day. This will show us that the market is making a small pullback. Now, on the 4th candle, we want the close of this candle to be below the close of the 3rd candle. This indicates that the price has successfully made the pullback, and it is now ready to make a lower move. So we will enter a short position on the close of this candle. We can keep our stop loss above the recent swing high, and we can place our targets at the nearest swing low. Let's now look at a sell trade example. So here, we see that the price made a new 40-day low on this candle. This shows that the sellers are dominant in the current market situation. So, they are looking to push the prices downwards. Then, we see that the market makes 3 consecutive green candles that close above the previous close. So this is a valid pullback. Now, we want the 4th candle to close below the low of this candle. And that is exactly what happens here. We see that the 4 candle is a red candle that closes below the close of the previous candle. This shows us that the price has successfully completed a pullback and will now make a down move. So we will enter a sell trade on the close of this candle. We will keep our stop loss below the most recent swing high, and we will place our targets near the most recent swing lows. On this trade we see that the price within the next 6 trading days. The market fell over 4.5% during this time. Now the strategy itself has a good win rate, but if you want to improve the odds even more, you should look at the general market for trend cues. This means that you should look at the respective index for trend direction. So, if you are an Indian trader, you should look for buying opportunities on stocks when the Nifty 50 is above its 50-period moving average. And you should look for selling opportunities when the Nifty is below its 50-period moving average. That way, you will make sure that you trade in alignment with the general sentiment of the market. So, that brings us to the end of this video. If you liked this video, then be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new videos. See you in the next video.